Hello, traders. Nick Shaheen here. Looking at oil. So this is a trade that I've not been a fan of, and I shorted quite a few times this year. But luckily, last time I did successfully, I walked away and I took it off my screen. So today, members are asking for an update. So here it is. By the way, if you don't subscribe to this channel, do so. It's free so far. And also set the alert to be notified when I post something new. Uh, Also, the comments are cool. Just keep it civil. All right, so I was shorting on all these pops, and I shorted the USO and also, let me see, CVX or XOM, but not this time because I took it off my screen. I figured when you do well enough to say, I feel like I'm overstaying my welcome there, so I left it alone. So today they brought my attention back to it, and these are the lines that I had from before. I just extended them and changed the names. So this was shortable zone, but clearly not anymore, and luckily I didn't have it on my screen to be tempted to short it with a tight stop. Now technically you can see that it looks like an inverse head and shoulders. The bottom line is there was a neckline here, a failure, fail, and finally they broke it out, and look, they came back and tested it and they went to the moon. So if you're buying oil here, you have a different perspective on life than I do. Let me say it this way. All right, how about let's translate it into oil stocks first, and then I'll come back to the oil idea. Uh, this is I'm going to take out the lines, so not to influence anybody's ideas. So this is Chevron daily chart, so about a year's worth of data. It's not enough for me to know what lies above these, so I'll go to a weekly to get perspective. The debacle from the pandemic makes sense that they haven't recovered it because we drive less, we fly less, we're zooming more. So we're driving more fuel efficient cars, and they're telling us that it's going to be no fossil fuel cars in the future, whether EVs or not EVs. So what the heck is all about chasing oil? Completely manipulated market. There's a coalition out there called OPEC, and now it has friends apparently, that they sit together in a room, they meet, and how do we screw people as much as possible and make ourselves most profit? This is illegal in the U.S. You can't have a cartel and set prices and okay, we're going to give this much so we can set that price. That activity is illegal in the U.S., so it's not cool. But it happens. So the fact that oil prices are rocketing through the moon is fake, in my opinion. And in fact, I bet you anything, OPEC would want it to go down, because the higher it goes, the more competition from the West it has. Because it used to be, now it's coming back in line. The break-even price of quote pumping in the West is much higher than the one in Saudi Arabia, for example. Even though they need, for socioeconomic programs, the break-even point is like 70 or whatever, I'm estimating somewhere. The actual pump out of the ground is probably $10, maybe even lower per barrel. So there's a fine line of having higher price, enjoying profits, and losing market share. So having said that, I think this mania to chase oil up will end in tears for people who chase it wrong. So if you tell me, let's go along Chevron, I tell you only if you can scalp $4 or $3. To me, I'd rather chase it once it breaks out of these failing points, because then it's a neckline that breaks upside in the favor of the bulls. And even then, it's going to have to, well, the upside potential is like here somewhere, technically, but look at the quote overhead supply it has to deal with, the accident scene from pandemic crash, and the point of control, that orange line. Look at the volume that's just waiting to happen up here, and it's fighting with the second biggest volume right here. So tall order, in my opinion, for me to buy calls and buy shares in Chevron right now. Mind you, Chevron pays 5% reward in dividend. I still would think it's a better entry point, closer or under 100. From an investment, so I can get fixed income. I don't want to short it, but I definitely don't want to chase it blindly. All right, so I bet you I'll find the same thing in Exxon, almost exactly the same thing. Look at this. It's even cleaner break. Chevron has two fails at one point. This one, it's just one clean 65, call it. But look left. Just look left. It's to the penny, this one. Okay, so machines care about it. I bet you anything. And then we fell apart, and this is our second attempt at it. Let me see if it happens again. So this whole cluster is what they're dealing with right now. So it has history back to 2008, probably longer. Yeah, 2005. So they're not. It's a contentious level. It's not going to be easy, although it's there. It technically would be a nice rally with a whole bunch of resistance. So go back to the USO. This is the weekly chart of the USO. So the breakout has, I wouldn't want to short it because I don't want to fight Goldman Sachs opinions. I have before, but this time they have technicals on their side. Breakout, it looks like a cup and handle thingy with a huge gap up here. So who's to say they're not going to clear? So this is your candle, your battle candle, 58.40, and below is the neckline. So 58.40. If it goes above that, it's in the gap. So these gaps are usually hard to fill, but with the right rhetoric, and mind you, it's rallying in the face of a rising dollar. That's unusual because a rise in the dollar puts downside pressure on everything priced in dollar, like gold and silver. They're both down today because of a spike in the US dollar. So it's not a mathematical correlation, but it does happen. It puts downside pressure. It's just a matter of fact. Okay, so a dip into 48, 49 should be bought. If it's not bought, then this meme might be over, but I wouldn't short it. So what's the conclusion here? If I'm trading oil for the sake of oil, I better be a fast trader and I better know how to scalp profits on a shorter term basis. Or I better have put the money at risk to fill that gap I just showed you, but I should scalp along the way so I can take out some house money. If I'm trading oil via Chevron or Exxon, I just told you that it doesn't make sense to start chasing them now from my perspective. I'm not giving anybody any advice here. I'm telling you what I would do. Like 108 is definitely not an obvious point of entry. This is the easiest way of saying it. It's nothing bad against it. It's just not an obvious point of entry. For Christ's sake, this is a company that's losing sale, that's shrinking, and it just rallied 16% out of nowhere. So same with Exxon. So for me, I either wait for a dip to buy it to get into it, or chase the rip after it breaks out from prior resistance. It will need patience, but so be it. There are thousands of other stocks I can trade meanwhile. And if I'm trading, quote, oil, I wouldn't touch anything else other than those two. If you insist on spreading the risk a little bit, the XLE maybe. I think 40% of it is those two stocks. Chevron and Exxon, if not more than 40%. So yeah, the XLE would spread the risk a little bit, but these are the two best ones. Why would I want to spread the risk? Taking one or the other is almost like taking both at the same time because they usually move hand in hand. One pays more dividend than the other, and I believe XOM is the one. 6% yield, 5.7 versus 5. This is freaking outstanding. This is 10 times what you get from a bank this year. It's just crazy, right? Okay. So that's it. That's the honest opinion on oil. It's a rigged market. Get pun intended. We have basically a band of tribes and countries controlling the price, and now Russia is in on the thing. And we're basically, the U.S. is in on it by choosing not to pump and to pump and restrict this and restrict that. So we are throttling back, creating this problem for everybody. Also contributing, not creating, contributing to the problem. So, it's a sensitive subject. It's dollars and cents for me, and cents like making sense on top of cents like dollars and cents. So all around, common sense and logic should prevail. We're using less. We don't have a shortage like it's disappearing, like it's not there. We're just choosing to throttle the supply. And we have delivery issues, I think. Here in California, we have ships stranded everywhere, so I don't know if that's the case with barges with oil. I have no idea, but it doesn't make sense. We're using less. We plan on using a lot less in the future, and everybody agree. It's like smoking. It's not going to be an exploding thing. It found its niche, and whoever still smokes is going to continue to smoke. Anyway, it's not like a growth opportunity. It just doesn't make sense that it is going to recover old glory, so to speak. All right, Nick signing out. That's enough of it.